Okay, let me break down why Japan's current inflation situation feels like watching a 30-year-old horror movie finally get a sequel, and everyone's confused whether it's a redemption arc or a disaster. Here's the thing, for decades, Japan fought deflation like it was a zombie apocalypse. Now, suddenly, the Bank of Japan is worried about inflation going over 2%? That's like telling a lifelong caffeine addict they're at risk of insomnia. Wait, isn't that what you wanted? But here's where it gets wild. The BoJ isn't just looking at numbers, they're trying to rewrite the psychology of an entire economy. Let's unpack this. So, core CPI hitting 2% isn't just a random target. It's symbolic. After years of companies clinging to cost-cutting like a life raft, the BoJ wants businesses to actually raise wages instead of just pretending to. But here's what cracks me up, wage growth in Japan is still barely a crawl. Like, they're finally seeing some movement, but is it enough to sustain this? Or is this just a flash in the pan from a tight labor market? Personally, I think the BoJ is playing a high-stakes game of psychological warfare here. They're not just fighting inflation, they're trying to rewire decades of corporate behavior. Now, let's talk about oil prices. The Strait of Hormuz being unstable? That's not just a Middle East problem, it's a global headache. Higher oil equals higher costs for everyone, right? But here's the twist, for Japan, which imports almost all its oil, this could force the BoJ's hand sooner than they'd like. And if the Fed ends up hiking rates because of the same inflation spike, suddenly the yen could get crushed. What's fascinating is how interconnected this is. Japan's domestic policy is now hostage to geopolitical chaos halfway across the world. Isn't globalization just lovely? But wait, what about the bigger picture? The BoJ is hinting at a rate hike around September or October. Why does that timing matter? Well, think about this, if they move too early, they risk killing the fragile wage growth momentum. If they wait too long, inflation expectations spiral. And let's not forget Japan's government debt is basically a black hole of 260% GDP. If the BoJ tightens policy, the government has to prove it's not a fiscal train wreck. But here's the irony, the same inflation they've begged for could now force painful austerity. That's some next-level economic irony. What this all boils down to is a paradox. Japan spent generations trying to revive its economy, and now that it's finally showing signs of life, the rules have changed. It's like training for a marathon your whole life, only to realize the finish line moved. From my perspective, this isn't just about interest rates, it's about identity. Can Japan transition from a deflationary mindset to a growth-oriented one? Or is this just another false dawn? Let me know what you think. Is the BoJ's caution genius, or are they about to blow their last shot at escaping the rabbit hole?